today's video, we're going to be covering my complete trading strategy that I use every single day to make consistent profit. This is also the same strategy I used to grow both small accounts last year, and it helped me close over 300k profit in 2024. The setup is very simple, so if you guys are new to trading or you don't have much experience, it's definitely going to be very easy to understand. I'm going to explain everything about this setup fully in depth, so by the end of this video, you should understand all of it. So with that being said, let's go ahead and get directly into the video and start by taking a look at the core concepts. And I also like to call this the forever model because this is an actual trading model that can last literally forever. It's never going to go away based on price action, and it works consistently throughout the years. All right. So the breakup structure for Rally Gap is very simple, and we'll break everything down in a second, step by step. But basically what we look for is a break above a key high or a key low, and then we look for a fair value gap, and that is what we play based on our trades. All right. So nothing really too complicated. It's very simple, 2 steps, doesn't have a lot really going to it, but it works like a charm. It's a very good model that anybody can pick up. Not a lot to really learn about it. Let's go ahead and break down every single step of this strategy so everybody can understand it from beginning to the end. The first thing we want to take a look at is what is a breakup structure. All we do with a breakup structure is we mark out a key high or a key low in the market, and the way we identify this is we want to take a look at any area where we had a strong reversal. All right, so in this case we had a strong drop, we want to mark out the high right here. In this case we had a strong move up, we mark out the low. So that's literally all you do for finding a key level. Just take out the last point that we had before a reversal. What we want to see with these key levels is a break above them, and we don't want to just see any break. We want to make sure that it's a very strong break. For example, in this case, we have a really clean break right here. We break above the high with strength. This is a very nice break of structure. All right, so that's step number 1 right. Over here, we have a very bad break of structure. If this is a bad one, we're not even interested in the entire setup itself, okay? So if the first step is done, it doesn't work, forget the entire setup, all right? So in this case, we got a break, but do you guys see how it instantly rejects right back down? We don't want to see that. We don't want to have that in our setup. We ignore this as much as possible. We want to see a very strong, clear break, and you guys will get a better understanding of what I'm saying with this whenever you take a look at it in a second. But basically, strong break is a very good sign. A weak break like this where we can't hold or really get a strong break above any key level, we're not interested in that at all. So that is step number 1. Very simple, just a very clean break, okay? So that's the break of structure. If we have this step, then we can move on to our second step of the model. So let's go ahead and take a look at that. So here we have a fair value gap. This is one of the most important concepts that we have in trading, and if you guys have been following me, you've seen this a ton on my page. So what is a fair value gap? I'll explain briefly what it is because it is a very important concept that you need a lot in trading. You want to have a 3 candle sequence, meaning that it's just 3 candles in a row. It doesn't matter the color, it doesn't matter anything like that. You just need 3 candles in a row. And what you want to go ahead and do is, I'll redraw this out in a second. We'll take the high of the first candle and the low of the last one, and we'll connect them. All right. If there is a space between those candles, that is what we call a fair value gap. All right. Just to explain the difference between what is considered a space and what isn't, we'll take a look right here. Okay. Let's say the candles look something like this. All right. If I took the high of this candle and the low of this candle, they are equal. There is no space between them. I can't mark out a fair value gap here. There's no opportunity. All right. But when you have a situation that looks like this, okay, you can take the high and the low, and there's a space between these 2 wicks on the candles. That is absolutely perfect for a fair value gap. That is exactly what we need to see. On the opposite end, same thing. First and last candle, take the low and the high, connect those 2. If there is a space between them, that is a perfect fair value gap. We'll love to see that, and that's where we look for our entries on this model. All right, guys. Again, if we have it where it's something like this, let me make sure that. If we have something like this where the candles can't connect because this low and the high are way too kind of away from each other, that is not going to be a fair value gap. It has to be a space between them that we can use for our entries. All right. If you guys are a little bit confused on fair value gaps, I have a full like 5 to 10 minute video on the entire concept itself, so you guys can go back on my channel and watch that if you want some more clarity on it, right? So with that said, this is the second step of our strategy. All right, first thing we look for is a strong break of structure, and the second thing we look for is a very nice fair value gap. All right, very simple. It just requires a little bit of intuitiveness, and you guys have to have a little bit of an understanding of price action, but other than that, you guys have literally just 2 steps right there, and we can find it every single day. So 2 steps down, we want to take a look at our last step for finding this setup, which is going to be the actual rule set. All right, guys, for this setup, these are the very, very important things that will give us an A+ setup. A lot of you guys kind of skip past this, and that's why you might not get good trades. First thing you want to look for is the setup has to be between 9:30 and 11 a.m. Eastern time only. We are not trading before 9:30 and we are not trading after 11 o'clock, okay? Only between these two periods of time can we trade this setup to get the best results. All right. Next thing we want to take a look at, it has to be between the 1 and 5 minute time frame. This is where we find the best setups, and it just depends where or which time frame we have the setup on. Okay. Some of you trade on the 30-minute or 1 hour, and that's not going to work. Just stay away from that. All right. So obviously, best case scenario is 1 through 5 minute. If you guys don't see it on the 1 through 5 minute, best to stay away from the setup in general. Okay. The next thing we want to take a look at is making sure we're trading on high volume tickers. Some people are trying to trade this on meme coins or random penny stocks or anything like that. That's not going to work. They have no volume. They have zero follow through. We can't do anything with that setup. All right. You want to trade things like SPY. If you guys are trading something like crypto, you want to use Bitcoin. Okay. SPY, Q, Amazon, Tesla, Nvidia, any company that has a lot of volume, has a lot of activity, we can trade this on. We can't use some random meme coin that just launched yesterday or anything like that. It's not going to work. Stay away from that stuff. All right, guys. The next thing we want to take a look at is that there is good price action overall in the market. And I'll show you guys an example of that in a second when we do our reviews, and you guys will get a better understanding of that in general. All right. So now let's move on to risk management. All right. This is very, very important, and this is for every single setup you guys trade. You need to make sure you have this. The maximum stop loss, meaning the worst possible case that we can have on a trade, has to be negative 20%. All right. And I'll show you another way that you guys can place stop losses and targets once we take a look at the examples. But very clearly, maximum stop loss, negative 20%. And for our profit targets, we want to go with about 25 to 35% profit on each trade. So we have a very nice risk to reward. Okay. Next thing you want to focus on, we only want to use about 5 to 10% of our portfolio on each trade. Nothing more than that. If you have a $10,000 portfolio, you only want to use about $500 to $1,000 on each trade. Some people are using like $5,000 to $6,000 per trade, which is insane. And that's like 60% of your portfolio right there. Okay. Stay consistent on your sizing and your stop loss and target. If you guys have this, you're not going to blow any accounts. All right. Make sure you follow this very, very consistently. Okay, so that is basically everything we need for this setup. And now I want to take a look at a few real market examples that I traded this week to show you guys kind of how it works and to get a better idea of the entire concept in general. All right, so with that being said, let's go ahead and take a look at our first example of a real market trade. So here we are on Tesla on the 2-minute time frame, and what we have over here is a very significant key high, because this is where we had a very strong reversal, and this is where we had a very strong reversal to the opposite end. So mark out both of these levels, and these are going to be our break of structure levels. All right. So what you want to do is you want to wait for price to break either one of these levels, and we want to play for a fair value gap trade on that exact area right there. Okay. So in this case, we came in, we took out the low. So that was step number one. We have a very, very strong break. We love to see that. That is absolutely perfect. We love seeing that on our setup. Okay. So that is step number one down. We have a break of structure that's very clean. All right. The next thing we take a look at is a fair value gap, which means we got the strong break. Okay. Now we want to look for a 3-candle sequence. Do we have that here? We absolutely do. 1 candle, 2 candles, 3 candles. Connect the high and the low. There's a space between those candles. So this is the area we are going to look for our entry. So break of structure is down, fair value gap is down, and the only thing we really look for at this point is for an entry inside of this gray box, which is our fair value gap. All right. We're not entering outside of it right here, and we're not entering outside here. It's only inside of this level that we are interested in this trade. In this case, break of structure down, fair value gap down. What I have to do now is I want to wait for price to come into the fair value gap, show me a good reaction, and that's where I will take my trade. All right. So let's take a look and see what happens right over here. So price comes into that gray area right here, and we have a beautiful reaction. Okay, meaning that seller stepped in. We have a nice wick. We love to see that, and this is a solid trade that we can take. All right. So in this case, I'll take my entry on this candle right here because it showed me good selling, and then we'll use our next levels for finding our stops and our targets. So like I said, for stop loss, we want to use the high of the middle candle of the fair value gap as our stop loss. Meaning if price comes and it takes out this level, we're out of that trade no matter what. We take the loss, we move on. You are never ever going to be holding a trade past this level, all right? If it hits that level, you are out of it no matter what happens, okay? This is very important. If you ever hold a trade past that stop loss, it's gonna blow your account, all right? In order to stay consistent, we have to make sure that we are respecting the stop loss. All right, guys. Now, for my target, I'm going to go ahead and take a look at the next key level that we have in the market, which in this case is right over here. If we ignore this little earnings wick right here, this is our next level. So this is going to be our target for this trade. That's where we're going to exit. Right here, we have everything we need. All right. We have a perfect fair value gap, perfect stop loss, perfect break of structure, and a perfect target. This is absolutely A+. This is a trade I took actually today as we were recording this, and it was a perfect follow through, and it doesn't get any better than this, okay? So let's go ahead and take a look at what happens to the setup and how we end up executing on this. So from that fair value gap, we get a very, very nice rejection down to that low for a very clean 5R trade that we can find pretty much every single day, all right? All we had to do was combine our short little checklist. I see the break of structure, I see the fair value gap, and I take my entry when the opportunity presents itself. All right, nothing really crazy there. Very, very simple. And we got the continuation down for a very clean profit. So that right there is one example. We're gonna take a look at another one so it makes even more sense and it becomes even more clear. All right, so with that being said, let's go ahead and take a look at our second example. So once again, we're going to mark out our key levels. In this case, we have a high right here, we have a low right here, and I'm going to go ahead and mark out every single point where I see a very strong reversal. All right. So in this case, we get the first break of the low right on this area right here. So we are interested in setups to the downside. All right, guys. So you have that right there. You have a perfect fair value gap that forms right away. Okay. Work that out with that box right there. And the fair value gap is just any 3 candles, doesn't matter the color or anything like that. It just has to be 3 candles in a row. All right. You also had a fair value gap right here. So these are all fair value gaps right here. They have space in between them. They're all valid. All right, guys. So in this case, very strong break of the low, very, very nice fair value gap. So the last thing we have to do is wait for price to come into the gray area. And if it shows a good reaction, we take that trade. If it doesn't, we don't take it. All right. So let's go ahead and see what happens when price returns into this level. So price comes into this fair value gap right here with an absolutely perfect reaction. As you guys can see, this candle has a very, very strong rejection, massive wick. That is exactly what we want to see. All right, guys. So in this case, this is an absolutely perfect area to take our entry, and we can start this trade off right here. Now for the stop loss, once again, we want to target the high of the middle candle of the fair value gap. So in this case, we use this as our stop loss right over here. All right. Now for my target, I want to go for the next significant low, which in this case is all the way down here, which is our key level, right? Because we had a very strong reversal right here. So this is going to be our target for exiting the trade. All right. So once again, very quick, very easy process. I look for a break of structure, meaning we took out a very significant low or a high. We then look for a fair value gap, and then we look for a reaction to that fair value gap. All right. Very, very simple process. Nothing really crazy there. Perfect. So we have our stop loss and everything set as well. Right over here, we have our target and everything set as well. So let's go ahead and play this trade out and see exactly what happens right over here. So from that fair value gap, you get an absolutely perfect move down to this low right here for another perfect low risk, high reward trade that we can find every day. All right. And the beauty of this setup is that we're able to find it literally every single trading day. We have an opportunity almost 99% of the days that we trade. Okay. It's a very simple checklist. There's nothing really complicated, and it's as easy as it really gets to trade this model. All right, guys. So the more you guys practice this setup and trade it in the live markets, the easier it's going to become. But the process is very, very simple. All right. Break a structure, fair value gap, move down to the next target. All right. As long as you guys follow the rule set and you guys are properly managing your risk, you guys are going to be consistently profitable. With time, the more you practice it, it'll become easier and you guys will become better at trading. So that right there was two very perfect examples of trades that we took just this week. And it's really nice to see this play out in the market, especially on the live calls. I know a lot of you are in the Discord. You guys are watching these trades happen live. So a lot of this stuff is happening right in front of our eyes, and we identified every single morning on the call. So with all of that being said, all right, guys, write down the checklist on a little sticky note or anything you need and just look for this setup every single day. And I promise you guys, it's going to change your trading 100%. So hopefully that clears up how to use the setup. So by now you guys should have everything you need to trade the setup consistently and start making money in the markets. But always remember, this is just the beginning. This is only the first video covering it. So you guys still do have a lot of work to put in. The real work's going to start when you guys start live trading this and journaling all of your trades. So that's when you guys will start seeing results. Obviously, this is just a basic introduction to the strategy and the market in general. So if you guys want to take a deeper dive into trading and how it works, make sure to check out the other videos on my channel. Now, I also trade this setup live every single morning in the Discord with the entire team. If you guys want to join in and watch me trade completely free for the next 7 days, I have a link in my bio, so make sure to take advantage of that. That's also where I have the extra one-on-one help if you guys ever need it, so make sure to join in and ask questions if you need anything. So with that being said, I hope you guys enjoyed this video, and we're going to be covering way more concepts every single week in a new video. So everybody take care, and I'll see you guys back in the next video.